Mr. Umesh Revankar now joins us to talk about what is happening in the entire CV financing market, the fact that things are looking up and bond yields now have stabilized. Is it back to the pre-COVID level demand for Shriram Transport Finance and for the entire CV finance industry? Mr. Revankar, good morning. Thank you for joining us. How much of your business, Mr. Revankar, has normalized to pre-COVID levels?
See, basically, there are few segments which are much higher than the pre-COVID level, and some segments are a little lagging. So it is somewhere getting balanced out. But I should say that it will take another couple of quarters to reach pre-COVID level. Right now, the last mile connectivity, e-commerce, and the rural transportation, that is above the pre-COVID level. But there are other segments, long distance, passenger transportation, road passenger transportation, or even the heavy goods vehicle movement, long distance. There are some constraints. They are not as much as a pre-COVID level. But I think with a lot of investment being there in the infrastructure, definitely there will be a huge demand coming. See, once the cement, steel, and other building materials start moving very fast, then everything will change. Whatever overcapacity being there in the heavy commercial vehicle, it will get absorbed very quickly, and the new demand will come for a fresh number of vehicles. So I think it's a matter of time. A couple of quarters we are away, is what I believe.
Say that your disbursements have gone up by 110% year on year and the AUM growth is only 6%. Can you explain those two numbers for us? I mean, how should we look that into context? Because if the disbursements are going higher so much, then why the AUM growth is so little?
No, the disbursement growth you are talking about is Q on Q. And AUM is, so year on year, if you look at whatever disbursement we had last year, in third quarter, same we have disbursed, almost same amount. It is not higher. It is only Q on Q because if you look at the Q2 was very small. So it looks quite large.
Okay. I want to understand, given that right now there is definitely a competitive market which is now having an impact on the way how the spreads have moved in the HFC sector. I mean, HFC demand is growing, but the competition has only intensified in the HFC segment. Are you witnessing a similar kind of a trend in the commercial vehicle finance market as well, where competition is intensifying because suddenly Sundaram Finance is very aggressive? I understand that IndusInd Bank is looking at revisiting the entire vehicle finance business. The vehicle finance business was a growing business. Then came the 2018-19 slowdown, and then came COVID. Have the dynamics changed because of these two events?
I really don't think dynamics have changed. Players who were there pre-COVID, pre-slowdown, they are there now also. So there is not much of movement or new, and neither there are new entrants, nor there are some people who exited from the competitive environment. So everyone is there, but everyone has their own niche segment. So everyone is not in the same segment. So we are predominantly in used vehicle and in the rural and semi-urban market. Whereas the IndusInd Bank would be more in urban market and the new vehicle. So there will be always a separate niche segment for each one of us. And we have our customer base for a very long time. And we have a very highly penetrated branch network of 1,800 branches plus another 800 rural center. So we have very deep reach and very niche player. We are not like others who are there in all the segment. We are only present in a vehicle. We want to be financial to the transportation segment.
Mr. Revankar, let's now talk about where is the entire industry moving in terms of the trend. Now, typically, second-hand trucks do very well when there is a slowdown or when affordability of the new vehicles becomes a problem or when interest rates are very high. Right now, interest rates are low. Everybody's starting capex. Do you think somewhere the CV market may grow, but the CV finance market may not grow, especially in the second-hand trucks?
No, it will grow. What happens is, if you look at how the LCVs go, let's look at the light commercial vehicle. Now, light commercial vehicle, the average ticket size of a light commercial vehicle, a new vehicle price, was around 3 lakhs. When I say light commercial, I'm talking about pickup trucks up to 2 ton. It is around 2.5 to 3 lakh was the price. Today, same truck is 6 lakh. And there is a new variants that are coming in that segment. Slowly, the segment is becoming a richer, more number of trucks are coming less than 1 ton, 1.25 ton, then 1.5 ton. So the prices are moved up. So more number of trucks are coming. So what happens is whatever the increase in price of new vehicle, new variant or variation, that will happen in the used vehicle also. Used vehicle price also will go up to that extent. So the used vehicle price keep on correcting itself as the new vehicle price move up. So the overall value of used vehicle keep increasing. That particular cake, it doesn't shrink or doesn't remain the same. It keep increasing as value of used vehicle, because every used vehicle is as good as a replacement for a new vehicle. So there is a value. So the used vehicle are the number of used vehicle and the utilization level and the price all will increase. And with the road being connected across all part of the country, especially in the deeper rural India, more vehicles are available in the rural area. If you go 20 years back, there were a motorable road in the rural area, and there were no trucks or there's no transportation vehicle. Today, every rural is getting connected with the road. Therefore, the requirement of a vehicle or need of a vehicle for transportation of both people and goods that have arisen. So, more number of people are owning the trucks. So, truck population is increasing over the period. Now, both LCV and heavy put together, there are around nearly 1 crore vehicle, 1 crore plus vehicle across India. And out of that, new vehicle sale would be around 7 to 8 lakhs only. That means the rest of the vehicle which are used, they are being used and they remain in the system as long as they are needed. So there will be increase in used vehicle throughout, and as and when there is a change in hand in used vehicle, then the finance is required to acquire the asset.
A simple question, Mr. Revankar, is that unsecured loans is where the trouble is because of the economy, because of daily wages losing out. Why is that unsecured space, which because of COVID was supposed to be under pressure, is not showing signs of crack? Are we missing on something, or this is a problem which will come back, which right now is just getting brushed away?
See, we are not into unsecured loans, but whatever I am able to gather is there are enough number of lenders to support the, if somebody has taken unsecured loan, if he's not able to pay to bank or one particular entity, then there's another entity which can give him the loan to bridge over the temporary crisis. But how long we'll be able to do it, and by the time if the individual is able to get a proper job or a proper business to run his entity, then everything will become all right. I feel there are that's helping the individuals, and also the government has been the government has been supportive of such support to individual businessmen, especially business MSME segment. I think all these things are helping, whether it is a credit guarantee scheme or the other liquidity measures that is provided by the central government and the RBI, all are helping people to get over a temporary crisis. And then it will become a new normal. Everyone will be able to repay. So I don't really think there is something is missing as of now. But because economy is getting back, people are getting job, people are getting back into the business. It is not that everything is lost and there is no doomsday at all.
How exactly do you think your spreads will move? Because when initially interest rates will start moving higher, you would be increasing your lending rates, but you will be still sticking to your low end, your old rates or low rates in terms of deposits. So next 12, 18 months, whenever rates go higher, do you think we are in for a NIM expansion rather than contraction?
Yeah, see, NIM expansion is something is always possible, and it has two major components right now for us. One is the borrowing cost. Incrementally, borrowing cost is coming down for us, and we're able to borrow at lower cost. That is helping us to expand our NIM. At the same time, we are also carrying more cash on the balance sheet because of the last 1 year. Reason being the uncertainties. But that over the period, we will reduce the cash on the balance sheet. And that means our NIM would expand again. So both these would help us to expand our NIM. As far as our lending rate is concerned, we have, I should say, pricing power in our niche segment, but we would like to pass it on. If at all there is an improvement in our the borrowing cost, we would like to pass it on something to our borrower. So we will not expand our NIM to the level where the borrowers are in disadvantage. We would like to balance the same. So the temporarily there will be around 20-25 basis point NIM expansion in next couple of quarters, but it may not go beyond that. So we would like to see that borrowers are benefited over the period.
Mr. Revankar, is there fintech fear in the CV finance business? Because that's one space where fintech has not reached at all.
No, I don't think that the fintech in lending module has penetrated in any of the segment. Even though there has been a lot of talk about new platform being created for the individual loans or SME loans, they are as a, it's like a tool. Now I have also some fintech tools to help me to onboard and do analytic of the customer and do the underwriting. So everybody is using fintech as more as a tool, not as the way to lend or change the way you underwrite the business. So if you are pure fintech player and want everything on the platform, I don't think that will be that will succeed in India the way people say succeeded elsewhere, because here looking into the creditworthiness of the customer, building relationship, and trying to understand the business of the customer, they are all very important. So the human intervention is always required in the lending activity. And we don't really feel that a fintech will come and disrupt the lending business model, whether it's the vehicle finance or even in other kind of lending.
So the unorganized players are getting small in your segment, especially the small players who would finance 1 truck, 2 truck, 5 trucks to the neighbor and friends and family at higher rates. Those folks are out of the business. You don't have a fintech fear. So where is the industry headed? Will it be restricted to 4 or 5 large organized players who will only be competing in terms of cost and in terms of cost of borrowing, distribution and network? Because it's a very unique industry. Every industry has a local end and a technology end. but the local end in your industry is getting crushed and the technology end is not getting incubated?
No, this is, local lenders will remain. It's not that they'll go away, because what happened is over the period, they have not been able to leverage and borrow much from the other banking or other sources or deposit. So their resources availability is restricted, but they are playing their role. So they're not highly leveraged. They have been playing their role, and they will remain in the system. I don't think they'll go away at any point of time. So the larger players probably have an opportunity to increase their presence in the market. So, and as I was telling you, the fintech will become a part of the tool in underwriting. It will not be a separate platform. So every player who have a niche presence in their respective business have an opportunity to grow.
How do you see FY22 and 23 moving? Because there are two ways of looking at the demand. One, the economy got shut down and demands come back, and 2-3 quarters will be great because everyone is excited about normalizing the economy, which means 2-3 good quarters and then a plateau. Other way of looking at it is what has come back in last 2 quarters is actually a trend and a cycle, and we could be in for 3, 4, 5, 6, even 10 quarters of growth.
I believe growth will be longer, and there will be a consistent growth. And there's a lot of play from the government that is going to make a big difference, because government has made a huge outlay for infra, and they are focusing on more privatization to bring in more private capital into the system. So the government infra spend and private capital coming in should help the growth for quite a long sustainable quarters or years. So I believe that growth will be there for at least 2 consecutive years. Then after, it may be a little dependent on what's happening on the international space, because the Indian economy cannot stand alone and grow by itself. Internationally, what is happening also will have some kind of a bearing on the Indian economy. So I feel today I'm able to see the export-import activity, which was almost came to the standstill, has increased. Port level activity in the last 2 months have gone up. There are more demand for the containers. That is indication of the export-import activity increasing. So the global economic revival and activity also will have some bearing on the way we are progressing.
Okay. Is there a pattern which is there in the ticket size now? Are you financing more to the loaders, tippers, 80-tonners?
See, we are not into a large ticket lending, but I can say that tippers are definitely increasing. So there is more demand for tipper, and there's more demand for loaders. So the activity at the infra is definitely higher than what it was a couple of quarters back. So I feel the infra spend is going to play a very important role in the way our commercial vehicle industry and construction equipment demand is shaping up.
What is the bad news? We've only discussed good news. Things are looking up, demand is coming back, delinquency is not there. Every business has a risk. So apart from any black spots which are related to COVID or which are related to macro, what is the biggest risk to your business?
The biggest risk is lockdown, because if there is a sudden increase in COVID and the lockdown coming back, that will disrupt the business to some extent. So it will be definitely a localized event. It may not be all India event, but that is going to have some kind of a challenge in managing. And maybe the global economic recovery also is a challenge, because if the many countries are in a lockdown, they're not getting back into the economic activity, consumption goes down, then the international trade and related activity also will come down. So India cannot grow on its own. It needs the global recovery also to support India's growth.
Okay. Just to wrap it up with one simple final question, is there a direct correlation in fuel and the truck demand? Is there a correlation which you've seen historically? Because the general view is diesel prices have gone higher, that will impact the demand for CVs, and that in a sense will have an impact on your business also.
No, in the past, if you look at whenever the fuel price have gone up, and as long as it is the truckers are able to pass it on to the end consumer, that there will be smooth increase. There will not be any disturbance. But if it hurts, and if it becomes inflationary, then automatically people will start cutting the expenses. So that's where the consumption will come down and truck demand will come down. Truck demand has no direct relationship. It is consumption coming down because of some other reasons that will hurt the trucking industry. So I feel the fuel price increase, which will ultimately, if it pushes the inflation, then the prices will go up, then lending rates will go up, consumption will come down. That is where the problem comes. As it is, it will not. Right now, the truckers are able to pass on all perishable goods. If you look at the vegetable price have gone up, and that means whatever the increase in transportation cost has been passed on to the end consumer. So there is a particular limit, and beyond that, it will become inflationary.
Well, Mr. Revankar, really appreciate your time. We've had a very detailed chat about industry, dynamics, sector, and your company. So stay safe, sir, and thank you for joining us. Let's take a break. We've got nothing on the screen which looks exciting, but in Bharat Forge, Hero Motor Corp, Container Corporation from the PSU stable, you've got Tata Consumer, and then Idea or even Bharti Airtel ahead of the board meeting. So yeah, it's a market which is not going anywhere, but you need that kind of a market which goes nowhere. We've had a vertical rise of 12%. This market is due for a rest, and I think it deserves it. Bulls even need to take a day off or a couple of days off. And if they do that, that's actually healthy. But let's take a break for the moment.